you ever miss class, you can watch it online. I got a YouTube channel that I post this on. So, now I'm not going to lie to you, it's not near as good as being here. But I just do that because I know a lot of people work and everything else. Some days it's just not going to happen. Okay, so here is your syllabus. So Department of Accounting and Finance, we're in winter term, hospitality 2, so congratulations to a lot of you who were in my Accounting 1 class. And let me just say that grade that you saw on ULearn was not curved at all. Very nicely done on that final exam, by the way. I am Ann Roberts. I'm a CPA, have been since 1991, and I'm an MBA from the University of South Carolina in '99. So I did return to school, and then I also did some work over at UNC Charlotte. So I'm all good. I got everybody covered. If you need to contact me, the best way to contact me is through email. Just do me a favor, and again, don't use it as chat. I'm not sitting there just dying, with my phone in my hand waiting for your email. Office hours, I'm going to adjust this because, number one, I figured out I'm going to have to leave at like the crack of dawn to get here. This is like the worst time to get here at 9:30. So I think what I'm going to do is I will probably add some office hours, and there's nobody in this room in the 7:30 time slot. So my thought is I'll probably try to be here sometime, give or take, between 8:30, 8:45, something like that. So a lot of you showed up early anyway, so I think I'm going to go ahead and add that little office hours before class, and then I'm going to try to head out before after class. I do get that going on You Succeed. Haven't done that quite yet because I wanted to confirm those before I added those. So does that work for everybody? A little bit before class and immediately after kind of thing? Okay. All right, good. All right. Just be aware, any appointments made on You Succeed need to be made like 5 p.m. the day before for the next day. But again, I will be here sort of in anticipation that you'll be here. All right. So I'll let you read the course description and the objectives. Required textbook. Okay. This is the textbook. Okay. It is the burgundy one. Okay, or rust color, whatever this is. This is the textbook. Just for all of you in Accounting 1. It's just as good as the Accounting 1 textbook. Maybe even better. So, and y'all all know I wasn't a fan. So, then the other book that you need, and by the way, I got an email from the bookstore yesterday that they did run out of books and workbooks. So they were ordering them yesterday for second day FedEx delivery. They should be here tomorrow. Yeah, they should be here tomorrow. So the other thing that you need is the workbook. Just like in Accounting 1, if you've had me before, we will work through all of this in class on the chapters that we're working on. All right. If you prefer an e-book, okay, for your iPhone or iPad or whatever, this vitalsource.com is a good source for an e-book. Has pretty good interactive highlighting, note-taking, all that kind of good stuff if you prefer an e-book. All right. Just like in Accounting 1, I think I set all my classes up pretty much the same. So, for those of you who've never had me before, just realize that how I organize every chapter is this. We start with reading, because I know y'all hate to read, so I grade it. So start with your reading. Start with your reading prep assignment, which tests what you just did. You can do the reading prep and the homework as many times as you want to, again, just like last semester if you've had me before. Quizzes, though, again, remember, one shot, 30 minutes, you're done with it. Okay, so again, I'm trying to raise the stress level as you're kind of working through each chapter. We will have 2 exams, midterm and a final. Not really necessarily cumulative, so to speak, but again, we can't rule out debits and credits and all that kind of good stuff, and we will do a review of that here in just a minute. So we will have exam 1 is going to be on chapters 7 through 10. Just make sure you are looking at that schedule, because in this class, I use a really weird ball approach to on the chapters. Okay, so we will actually start with chapter 9 today, not chapter 1. Okay. All right. The other thing is, again, just like all other semesters, lowest grade in each of those categories, reading, prep, homework, and quizzes, are dropped until we take the second assignment in each one of those categories. Just realize that when you take one assignment, it thinks it's the lowest grade, so it will drop it immediately. So until we actually get a second assignment in those categories, you won't actually have a calculated grade. Okay. Also, be aware that your lowest grade is dropped from the get-go, so a lot of people will come to me towards the end of the semester and say, hey, well, are you going to drop my grade? Yes, I know, you still see it, but it is dropped, okay, already. So don't be thinking that you're looking at your average and think, oh, I might get another drop grade from this. Nope, already done, okay? For midterm and final, you do get the opportunity for one-sided 8.5 by 11 sheet of notes. Just be aware, no copy and paste of my work. It should be your work, so you can have that for the exam. My suggestion is go ahead and start working on those note sheets before, as we're kind of working through the semester. Okay? All right. Any questions on the grades? Okay? All right. You can go through and you can read campus policies. I do reserve the option to change, schedule as needed when something arises. Computerized assignments. They are due at 9:30 on the due dates on the schedule, which we'll go over here in just a minute, and they become unavailable at that point. Keep in mind that reading prep and homework, both, you can get back into those, but if you want to go back and look at a quiz, you got to come to me to go over and review that, okay? And I promise I don't bite, for those of you who don't know me yet. Let's see. Final withdrawal date, I'm going to have to check on that one. I couldn't locate that when I was putting together the syllabus. Again, success factors. Come to class. Come to class. Come to class. Come to class. Okay? That is the best way to succeed and engage. I don't like standing up here just talking. All right? Y'all know that. Most of y'all know that. All right. Read and study each chapter. Got to do that because it's graded anyway. Participate and ask questions, so be ready with questions. There are no stupid questions, just ones that aren't asked. Complete all assignments. Don't get behind. I think most of you have figured that out yet. So it's pretty well cumulative as we work through the semester. All right. Email and you learn. Just keep in mind that if you have any issues with either one of those, can't get into the assignments, whatever it might be, you need to call the help desk right there or email them, and it needs to be documented if you're going to get a do-over. Okay? Unless I've gotten an email already that says that the whole entire thing's down, that kind of stuff. All right? Other required computer software, I use Microsoft Office products. You have access to those through your Office 365, so just be aware that that is in play. All right. And by the way, I don't put all this stuff out there. Everybody says that I should put it in PDF format. Here's the thing: when you get out of college, you're going to have to use it in the original format. You might as well figure out how to use it now, right? You'll look smarter when you get through your job. All right. I do plan to record class lectures. We are doing that now. So after class, the lectures will post to YouTube. Attendance policy, you can go in there and you can look at that. I'm not going to read that one to you. Makeup policy, just notice those are in quotes because there's not really one. Okay? So exams will only be rescheduled in the most extreme circumstances. Okay? So again, I've already given you an example there. Childbirth is the only one that I've allowed so far. So, extreme. All right. You can look at the outline, and here is the schedule. There is the original preliminary schedule is posted at the bottom of the syllabus, but I do keep one posted all throughout the semester in Excel format. You should be in your place ready to begin at 9:30 a.m. Just realize that when you come in late, just try to be as quiet as possible. Some of us extroverts notice everything that's happening in class. All you introverts don't even notice. So, any questions about the syllabus? We're going to go to the schedule next. All right, let's take a look at the schedule. All right, again, it is out there on ULearn. Okay, so short introduction, syllabus and schedule review, that's today, and then we're going to start on the Chapter 9 lecture. Okay, so I try to tell you the way to work this class. Again, so many people, they never are told how to succeed in a class. So the thing is, you're a little bit behind already because you haven't read Chapter 9. So before you come to class on the first day that we're going to discuss a chapter, read the book, take the reading prep assignment. Then we're going to print the PowerPoint slides, which are out there. Okay, they're also posted as well. So I'll show you how to print those here in just a minute. Okay, so again, this first section is going to be a little oddball on my approach to it, only because I think it just makes more sense. So we're going to start with Chapter 9, then we will move back up to Chapter 7, okay? Then we will bounce back to Chapter 10, and then back up to Chapter 8, okay? I realize that's a little weird, but I think it works, okay? At the end of, right there in the middle of Chapter 8, we're going to have our holiday break. Then we're going to have the Chapter 8 practice problems. Now, I know this is going to be kind of weird, but the simple fact of the matter is I teach at Central Piedmont on Tuesdays. I can't be here that Tuesday when they change that Monday schedule for a Tuesday schedule and all that. So on January 17th, you will take your first exam. So we'll actually start Chapter 1 lecture before the midterm, and then you'll take the midterm. Okay? Sorry about that. I realize that's kind of an oddball way to do that.
So we won't be here on Tuesday.
I know it's a Monday, Wednesday, but the 16th is Martin Luther King Day, which we will be off, and then that 17th, they do that swap for all the Monday classes happen on Tuesday, and there are no Tuesday classes. Okay? So, again, I can't be here on that Tuesday because I'm teaching somewhere else. So, I'll just have somebody come in and proctor the exam. Okay? All right. I believe the last day to withdraw is the 20th of January, so again, I'll confirm that without a final grade. Then we will, at that point, after the midterm, then we'll be in sort of a chronological format. So, Chapter 1, 2, 3, 4, 5. Okay? Then the final exam will be on the 22nd. Okay? Any questions on the schedule? So, again, I handle my classes exactly the same as I do all the other ones. You read, We come in, we talk about it. Constantly trying to push all this stuff into your long-term memory. That's why I approach it this way. So then we'll talk about it. Then we'll do practice problems all day. Then you will have the opportunity to work on some homework, get your questions answered from the homework. Then you'll have a quiz that's due. That's the way we do every single chapter, just like last semester. All right. Next item is the PowerPoint slides. So, again, to find the PowerPoint slides, okay, so, and you learn, again, this is all set up the way that all my classes are, so you're probably familiar with this if you had me before. So, again, you can go out there and you can take a look at all the announcements that are already posted, including this welcome announcement that's got some things in there that you need to make note of. Syllabus and schedule, they're right here in the second one. Again, I keep a schedule posted as Excel format. Grade prediction spreadsheet, that one I think works pretty well. Gives you an idea as you're working through the class on what your grade's going to be. A lot of you came and talked to me about that. There's a little bio, short bio. You'll find pretty much everything listed under graded assignments under each chapter. So in chapter 9 right now, we've got reading prep homework quiz. Okay. All right. PowerPoint slides, you'll find those here. They're in numerical format. Okay. But once you pull up chapter 9, again, do a little file, print, and then come down here. We're going to print all slides, but don't choose the full page. My suggestion is 3 slides per page. So you've got all the information that I'm working on the screen, and then you've got room to take notes. Again, keep in mind, you cannot write and listen at the same time. They've done studies. It's proven you can't do it. So it's better to print these slides and work from there so that you can actually actively engage in the discussion. Questions? All right. Wow, this goes really well when y'all already kind of know what the answers are. Let's see what else. Let's take a look a little bit more about what's out here. Workbook solutions are out there, so the day that the workbook solutions are covered, then we will, actually I need to hide that because it looks like I need to update some dates. But the workbook solutions, the day that we do workbook exercises, those will post after the discussion is over with. Discussion boards, there you go, right there. And we will actually run through, once we finalize the seating chart, we'll run through and everybody can introduce themselves there. Little JWU, couple of links there. We do have accounting tutors. Several of you will attest. We have some issues with some accounting tutors not being able to get you to the right answer. So I'll be here before and after class. Outside web links, nothing there. Other miscellaneous info for tutoring. Class recordings will not actually post here. Again, I'll give you a link to take you out to the YouTube site where all that is located. Anything on ULearn? Good? All right. Okay. So, let's get rolling. Well, let me just say, anything else that anybody's wondering about the administration of the class? I think most of y'all know that. You're probably good. Okay. All right. It's thinking awfully hard. All right, there we go. Perfect. Okay, so Chapter 9. In this particular class, we're going to focus, last term we did restaurants, now we're going to move into hotels that actually have restaurants and rooms, okay? Bars and all kinds of things. All right, so here's all your competencies for the chapter. Use those. They're all at the beginning of the chapter, so just use those for I have no pens. Hang on one second. All right, so for those of you who still have issues with possibly debits and credits, all right, keep in mind, and this is more review, all right, everything rolls up to assets equal liabilities plus owner's equity, right? That's a yes. Okay, so keep in mind when we're working on balance sheets, we're filling in assets, liabilities, and an equity in a summarized format. Okay, current, long-term, or non-current assets are the groupings on the balance sheet, as well as property, plant, and equipment. Then we also have liabilities, current and non-current as well. Then when we're looking at the balance sheet and we're looking at the equity, we see stock and we see retained earnings. We'll see multiple kinds of stock listed out there on the balance sheet if there are multiple types of stock. Otherwise, retained earnings on the balance sheet we see in a summarized total. Okay? Now, remember when we're doing statement of retained earnings, right? We started off with beginning retained earnings plus or minus a net income or loss, okay, minus dividends equals ending retained earnings, okay? So remember, on the balance sheet, what we're seeing is ending retained earnings, okay? So when we're looking at plus or minus a net income, we're looking at revenues minus expenses. Then we're looking at dividends separately to roll up into this ending retained earnings balance, okay? So as we're talking about debits and credits, debit is on which side? The left. Credit is on the right. Okay, so when we're talking about assets, they go up on the left. Now, depending on how your last one, did you have, who have I not had? I think it's just you. Okay. Don't know how many teaches, but here's the deal. I try to make debits and credits really clear here. Really super easy to remember this. You don't have to remember acronyms. If you can remember assets equal liabilities plus owner's equity, you can figure out debits and credits. Because here's the equal sign. Everything to the left of the equal sign goes up on the left. Everything to the right of the equal sign goes up on the right. Except for contra accounts, which are the opposite. Yeah. All right? Okay. Perfect. All right? Liabilities go up on the right and down on the left. Equity goes up on the right and down on the left. Then the only other things that we have to take care of are revenues, expenses, and dividends. So revenues do have what effect on equity? If revenues go up, what happens to equity? It goes up. So revenues go up on the credit side and down on debt. Okay? If expenses go up, what effect is there on equity? It goes down, so expenses go up on the debit side. Okay? Dividends. As dividends increase, equity goes down, so dividends go up on the left. Okay? Everybody good? the same thing every single time, so don't miss that, okay? At this point, the more practice and practice and practice and practice, that will become second nature to you, okay? All right, so review, okay? This is part of the reason why I start with Chapter 9, okay? It's the easiest review, so we're going to stretch those accounting muscles again. We're going to get those rolling. All right, so income statement, okay? That's the first financial statement that we work on, right? And the income statement is revenues minus expenses equals net, well, income or loss, right? So when we're working on the income statement, this one happens to be an external income statement. We'll look at internal income statements as well. Keep in mind when we're looking at external income statements, all this is going to be in a summarized format, okay? Then we're just going to simply list all of our expenses, okay? We get down here to an income before gain on sale of property, which also can be called income on operations, okay, or income from operations here, okay. So everything above this point is associated with what we do to actually earn money, okay. Down here, we've got a little gain on sale of property. Well, we're a hotel. We're not in the business of buying and selling property. So this little gain down here on the sale of this property actually flows down here below income from operations. And then income taxes always last. So we end up with a net income of $60,544, which pulls over to our statement of retained earnings. So retained earnings at the beginning of the year, and remember on your trial balance, on your adjusted trial balance, this is going to be the balance sitting out there in retained earnings. So then here's our revenues minus expenses. We get our total, we subtract dividends, and then we get the ending retained earnings. Now, remember, once we hit closing entries at the end of the year, this will now be our new balance in retained earnings after the closing entries. Okay? All right. External balance sheet. Again, note the groupings here. We start with current assets, all in order of liquidity. And remember, what is liquidity? Remember? Perfect. How fast something turns into cash. Okay. Then we group by property, plant, and equipment. So we list all of our items out here, our accumulated depreciation, and then we have a little grouping here for our leasehold improvements. China, glassware, and silver. Remember, we treat those a little bit differently. We're going to look at those in detail at the second half of the semester. Okay. Then we've got our other non-current. Most of these are intangible assets, so we've got our security deposits and our pre-opening expenses there. Okay. Now, one thing to note is this. This book was printed, I think, in 2008, I believe, on the copyright. I think that's right. 2008. 2007. We have had a change in accounting rules since 2007. Okay, so one of the changes that we've had are these pre-opening expenses. You will no longer see these on the balance sheet anymore. GAAP now says we just expense them as incurred. Okay, so they'll go directly to the income statement. Okay, again, that's one of those things we'll get into deeper in the second half of the semester. All right, liabilities, we've got all of our current first and our long term. shareholders' equity. We've got our common stock, our additional paid-in capital, and remember, additional paid-in capital is what? Remember? Where does this additional paid-in capital come from? Do you remember? No.
That extra, are you talking about the extra money paid for stock?
Exactly.
Instead of our value one and they buy it instead on the.
Perfect. Perfect. So, additional paid-in capital, anything that the shareholders pay over and above the par value. So, they pay a lot more for this stock than par value. Okay? And then we've got our ending retained earnings sitting there. Okay? So, all this is review, or should be review. If it's not, you better start your reading. Okay? All right. Again, remember, current assets converted to cash within 12 months. Here's the different items that we have listed in current assets. Now, let's talk about what the character of each of these are. Cash, that's just cash, money in the bank. Short-term investments. Give me an example of a short-term investment. Okay, anything less than 12 months, but give me an actual real-world example that you can think of. Think of a short-term investment. What might it be? No. Not an insurance policy, but you're sort of headed in the right direction. No. No. How about we had some excess cash and we decided to invest in some stocks or some bonds for the next 6 to 12 months. Okay. Accounts receivable. Where does accounts receivable come from? Exactly. They buy something from you and they still owe you for it because they walked in, bought it, and said, put it on my tab. Okay. Inventories. What would be classified as inventory? Okay. Food. There's one. Office supplies might be included in inventories. Operating supplies. But when we're talking about inventories, remember, this is something that we're going to consume as we earn money. We're going to use this up and or sell it to the actual customer. Give me an example of a prepaid expense. Okay, prepaid insurance. Why is prepaid insurance handled that way? Give me real world. No. Think about it. Prepaid expense. Wow, this got really old over Christmas, or over Thanksgiving. That turkey's hot. Okay. Remember, prepaid expenses, when we're specifically talking about insurance, remember, it's just like you're all over it. So think about what's happening here. We have to pay for this expense up front. So when we're talking about insurance specifically, especially like automobile insurance, we pay automobile insurance usually in the business world every 6 months. So we pay 6 months in advance. And remember, GAAP says we only get to record the expense when the expense is actually incurred. So when we prepay it, we use it up as those 6 months pass. Give me another prepaid that we talked about a lot last semester in Accounting 1. Prepaid rent. Okay, so maybe we have to, every rental contract that I've ever seen, you got to pay first and last month's rent ahead of time, right? But we haven't moved in. So that ends up being a prepaid. Okay. All right. All of this should be reviewed. Okay. Give me. We've got some non-current receivables, investments. Now we got something different than a short-term investment. We've got regular investments, property and equipment. We've got other intangibles. This deferred charges we're going to talk about here in just a minute. Give me an example of, we hadn't really talked about this in Accounting 1, but can you think of what might be considered a non-current receivable? Okay, somebody books a banquet beyond 12 years. 12 years. How about 12 months? Right? So some of these places where that are in very, very high demand, that would be good, wouldn't it? Some of these places that are in really high demand for wedding receptions and that sort of thing, they have to book 2-3 years in advance, and they require deposits. So any kind of deposit might be an issue there. Well, not a deposit. Well, clicked on that one. Did you see that? That was really sweet, wasn't it? So we're talking about something longer. All right, let's move on. All right, so investments. What's the difference between short-term investment and current and regular investments here? It still may be stocks or bonds, but longer period of time, right? Okay. Property and equipment. Give me the indicate. What's property and equipment? Land, buildings, kitchen equipment, right? All this depreciable kind of stuff. Okay. Then we've got other assets. So give me an intangible. Okay, a security deposit. Can you think of another one? Nope, not the pre-opening expenses. Okay, not the pre-opening expenses. We're going to ship that one off of the balance sheet, but I know he's got it out there. How about a licensing agreement? Okay, trademarks could be one, sure. Okay. So intangible, legal obligations there, legal rights that we have to do something. Okay. Then we got, do what? Sure, copyright could be included in there as well. Okay. All right. Then we've got deferred charges. So now we're talking about long-term contracts. Okay. Now we're talking about we've signed a contract with somebody saying that we're going to do something for a long period of time. Okay. All right. Liabilities. All right. So current paid within 12 months. So give me an example of unearned revenue.
Like if somebody booked a moving deposit and they booked your hotel for something, the money that was they still have left to pay.
Right.
It hasn't happened yet.
Well, the unearned revenue part is the amount that they gave us, but we haven't provided the service yet, right? Okay. Now, this one, the deferred income tax, let me go ahead and just give you an example here, because this is going to be something that this is an advanced accounting topic. I don't know why he brings it up in the book, but we're just going to go with it. Okay. So let me give you an example of what deferred income tax is. Okay. Number one, if you remember when we were depreciating everything for our books last year, we kept using a salvage value, right? Okay. But for tax purposes, we don't use a salvage value. For tax purposes, we actually get to depreciate a physical asset all the way down to 0 net book value if we want to. Okay. So instead of reserving any type of salvage value out there on the books, so let me give you an example of, let's say that we purchase a $100,000 asset, doesn't matter what it is, and we determine that asset has a $10,000 salvage value to it, right? If you recall from last semester, we're only going to take over the number of years that we decide we're going to take it. We're only going to take $90,000 worth of depreciation on that asset, right? And then we're going to leave that asset on the books at $100,000 in the asset account, and then $90,000 worth of accumulated depreciation, and then we're just going to stop, right? Well, when you're over here on the tax return, we actually will take a full $100,000 worth of depreciation over the life of that asset. We depreciate it all the way down to 0, okay? So the difference becomes this issue of we take $90,000 for book purposes or financial statement purposes. That's what the rules say that we can do. But over here for tax purposes, totally different set of rules out there for tax purposes, and this depreciation becomes an issue because for book purposes we may only take $3,000 one year versus tax purposes we may take $10,000 in another. Okay? So then the income for the tax computation becomes a different number. Seems really weird. Again, you start to see why this is an advanced accounting topic. Y'all are, nobody's going to become a CPA in here, right? Y'all are all, okay. All right. So, and this is truly an advanced tax topic here. So, we actually calculate income tax for book purposes at a different amount than we would for tax that year. So, the $6,000 is actual tax that we pay, but for book purposes, we're calculating $8,100. But we only pay $6,000, okay? So you constantly have this timing difference on maybe taking a little more depreciation in one year than another for book purposes. Plus we have this issue of we take $90,000 total over the years for book purposes, but we take $100,000 for tax. So those depreciation differences throw us into this catch up and take more depreciation and catch up and take more depreciation mode between these two book and tax returns, okay? So the deferred income tax is going to be the tax that we're actually going to have to pay later when we actually catch up between the two of these, okay, over the whole entire life of the asset, okay? That's the last time we talked about deferred tax assets, okay? All right, so long-term liabilities paid greater than 12 months. So give me an example of a long-term liability. Okay, a mortgage payable, but it's the amount that we're going to pay beyond 12 months. You got it? So our 12 months is going to be sitting up here under current. Okay, the amount of the principal paid within the next 12 months is going to be sitting up here under current. Everything else beyond 12 months is going to be sitting down here in long term. Okay? All right? Equity. Now, we didn't really talk about preferred stock. In last semester, we talked more about common stock, but just realize there are some differences between common and preferred. Now, preferred stock is this very weird animal. I'm not going to lie to you. It's sort of a character of debt versus equity combined together. Okay? You got to love finance people. They make this stuff up, I think, as they go sometimes. But preferred stock is one of those things where you actually become a part owner in the company, but here's what the trade-off is. When you're talking about preferred stock, the company declares that they will pay X number of percent or X number of dollars in dividends every year to you. You are guaranteed that. But here's the trade-off. Because you're guaranteed the money in return, you don't get to vote when the decisions are being made by the board of directors, and you don't get to vote on the board of directors as a common stock holder would. But the common stockholders, they get the vote, but they don't get guaranteed the dividend. Okay? So the fact that preferred stock, you get kind of this guaranteed dividend, throws it into sort of this funky zone of being equity, but it sort of functions more like debt because those dividends are guaranteed to the investors. Okay. Make sense? All right, talked about petty capital already. What's treasury stock? That's when you buy back your own stock. So do we deauthorize treasury stock? No. Okay, treasury stock is still authorized and we can sell it back out without having to do anything additional to it. Okay. Retained earnings, remember, that's basically this equation here. You can see half of it now. Okay, so our beginning retained earnings plus or minus the net income minus dividends. So remember, when we're talking about retained earnings, and we're talking about specifically dividends affecting retained earnings. Do dividends affect retained earnings when they're declared or when they're paid? When they're declared, okay? So remember, when dividends are declared, that becomes a legal obligation by the company to pay those dividends, okay? All right. Now, here is, staying on the balance sheet, here is an internal balance sheet. Now, notice the difference between this balance sheet and the last balance sheet. We see a lot more detail, especially up here in cash, and we see a little bit more detail, well, we probably see a little bit more detail down here in property and equipment, where we would break those out. And again, pre-opening expenses would not show up on the balance sheet, not anymore. Okay. There's our liabilities. That's about the same. So is our stockholders' equity. Okay. All right. Let's do this. Let's go ahead and take our break before we get into common size, and then we will continue on with that when we come back. All right.